Good morning, 8/9/2012, major update, time 10:46 a.m. Pacific Standard Time. Once again, it's 8/9. It's our major calendar yearly August update. And we have our new website now. Therefore, we just want to make sure that you do have the right updates, MMT, so you can go back and just remember, once again, all of the leadership stocks that we have traded over here that's in this index. KMB has been performing okay. You got McDonald's that had a little problem on their earnings the other day. You got the cigarette maker in here. Pepsi still up there. A lot of these are dividend payers that Walmart's in here. The thing that I would want to discuss, the leaders are the ones that we trade. Let's keep that straight. The ones that perform in this actual Morgan Stanley consumer. Now, it's a consumer index, all right, but look at it breaking all-time bullish yearly highs. Right in the heart of a bad economy, right in the heart of central bankers around the world that are going to do their thing. You got our Federal Reserve over here. Nonetheless, it has led the rally, as we said a year ago. This is where the bull would have to gain the contraction again. Unlike in other calendar years, this particular index always performs well. It's the leadership names and the blockbuster earnings and individual leaders here that have led this the way. Okay? And I can tell you once again, the individual names that have pushed this is all the names combined together, but it's the few of the leaders that push them higher. I've got one of the better bullish breakouts, once again, every calendar year now. And we've been around for 30 of them. So I will tell you that every calendar year, you get these great plays and those names. And fund managers, hedge fund managers, they kind of pull back off their yearly highs. But look at the amount of rallies. Back in 2010, when we did QE2, we knew we had to be long this because it would outperform the broader market, just as it's outperformed this 2012. We had that correction that needed to correct, as it did here, and this is a weekly chart. The main thing that I would like to do is just show you carefully, MMTs, exactly where the base of this, and right here, we made all-time highs. It outperformed just as we had forecasted. We forecast our own things now, and what will lead the broader markets, even in the mix of a huge slowdown. So the thing about it is, does it mean it's sustainable? Everything goes up and comes down. So we're at the major wall of resistance. Based on the earnings cycle, we got Disney in here, okay, you got Johnson & Johnson, but McDonald's, you got CO in here, that's performed well. You got dividend payers in here, people that are involved in big mutual funds. They like to own these certain names up here. Look at that ADP, still been performing. Okay, so once again, when you take a look at CVS, well, it's a mixed bag of consumer, because it is consumer, Morgan Stanley Consumer Index, bullish calendar 2012. It's a major update because let me tell you something. If we don't get everything right, when we're at these multi-highs and we run into any problems in the future, they're going to come down hard. And I just always warn the casual investor that may or may not be involved in the market, if you see the video, you got to know when to exit these names. You don't want to be greedy. Does it mean you have to sell everything that you own? No. If you have 100 shares of one and you have another 100 shares of another, let's say you got 300 shares of another, you can always sell half of everything up toward the highs. That's what we're telling people. That's why we're updating everything right now.